All right. Good evening or good afternoon, everybody. This is Jeff Scott, and it is April 20th, 2014, and this is my Easter edition of my weekend review. Let me start the slide deck up. We'll do a quick slide presentation as usual, and then we'll jump into the charts. All right, so if you couldn't tell from my presentation yesterday or last week, it was pretty obvious that a bounce was on the horizon. We pretty much called it right. I talked about taking out the Friday lows, and that might be an all clear sign. And we'll look at what the NASDAQ did on Tuesday. But Tuesday was the day that I started changing my approach, started getting a net long, and closed out my contras. So the bounce was obvious. Now what? And the concern is, are we really just going to turn into this with lower highs and probably, although you can't see it here, higher lows? Or are we going to reach to new highs? And I think it's a big unknown. Let's take a look at what the charts tell us. Here's a disclaimer. As usual, this is for educational purposes only. Any recommendations are in the spirit of education and not investment advice. I'm a doctor, not a broker. I am not affiliated with any software company. I own the tools that I present. I am independent in every way. I guess that means nobody's responsible for what I say either except for me. And I have paid for all the tools that I use. Little change to this chart. My hope is to help you become your own guru, something that Ian Woodward up here has done a lot to help me with over the last 20 years. This slide here includes a lot of important people to me, Ian Woodward and Ron Brown, and then the books of people that are important to me, Alexander Elder, O'Neill, Morales, and Katcher, Jesse Stein, Mark Minervini, Steve Bigelow, my favorite candlestick guy, Pascal Willane, the impact of the large purchasers, the institutions on the stock price, Van Tharp, which is behind the green book, which is Trade Your Way to Financial Freedom. Van Tharp is money management, Anna Coling, a nice perspective on volume price analysis, Ron Grunke on how to write covered calls and naked puts to create income. And the most recent edition, I just finished this book, is Mastering the Stock Market. This is John Person's latest book. I thought it was an excellent book, a relatively easy read. He uses Genesis as his charting platform, which I have, so I thought that was interesting. But he's also very much a top-down guy looking at the market, looking at the various industries that are working at a given time, and he uses seasonality to help them. The other thing that's good about that book, even if you use TradeStation or Thinkorswim exclusively, is that a lot of his indicators, for example, are pre-programmed into Thinkorswim around person pivots and his GPS buys and sells. So something I thought was a very worthwhile book, and therefore it makes it to my slide. I have a lot of things on my desktop. What I really need to have is my TradeStation and Thinkorswim. And then for analysis, I use HGSI, EdgeRater, Magenta Trader for seasonals, and MarketSmith is another one of my favorite programs. I use MarketSmith some for screening, but mostly because I like their clean charts, but I also like their fundamentals. And I use it to supplement HGSI, and I find it very useful for that. I always look at this and I wonder where we are, and as would have it, I think we're going to take a little leg up. We certainly did on Wednesday, Thursday, and Friday. It looked like we were rolling over, and just before we took off down the fall of greed in stage 4, we turned up and we did another small leg up. So whether we go to new highs or we drop from here remains to be seen. But I think right now, at worst case, we're neutral. My guess is we've got a little ways to go up, although as you'll see, there's some contradictory findings that I saw on my charts. Again, I like to remind people that one of the strengths of HGSI is from a top-down perspective and the number of indicators that can be used on stocks, industries, and markets to help you get an understanding of where we are. One of the reasons why you might want to come to my meeting in June is if you look at these and they don't make sense to you, these are great tools. Although I'd love for you to all buy HGSI, frankly, we don't play games. We give you the formulas, and you can have them programmed into other programs as well. I think you'll see how I use HGSI, that it's a rather unique platform and worth the $5.99 a year expense. One of the things that we can do in HGSI is we can create artificial indexes based upon whatever stocks we want to look at. We've been watching the Canaries ever since Ian pointed them out about a year ago as the leaders of the market. Priceline, Apple, Amazon, Google, Tesla, Facebook, LinkedIn, and Netflix, obviously not necessarily the leaders right now. And 2 weeks ago, I came up with this picture and said the Canaries had died. Well, I guess it's appropriate on Easter for a potential resurrection. I'm not saying they're resurrecting, but I'm saying they're clearly going sideways here and potentially setting up for another run. It might be nice to see this go on for 2 or 3 weeks of basing, but I think they've stopped falling for now. Lots of overhead resistance. Here's the 17-day and here's the 50-day. Still above the 200, easily could roll over, but you've got some pretty nice bottoming tail action here, followed by a doji on Friday. So where they open up may lead to where we go the next couple of days. We also put together a list of leaders last October. We called them the lower left, upper right. It used to be called things like Ronnie Index and German indexes. Stocks are listed here. And they too had sold off from the beginning of March. And they look like they put in a bottom Wednesday. You see this long bottom, or Tuesday red, long tail to the bottom here. Again, traded right up to the 17 with the doji. So they too have resistance here. But an up move this week could lead us to take out the 17 and the 50. This 2 areas of resistance, however, could be barriers, and we'll have to see what the market does. We picked a list in March. So this is an updated list, and hopefully you can read it. The intent here is not to give you the list, but rather to show you how we use it. The list is pretty much something that we build for the attendees of the meeting, but it gets out there. And what you could see is that the list that we picked in March has not broken. And you could see on Tuesday it held at the 50-day moving average, closed right on or above the 17-day on Friday, or Thursday rather, and to me looks poised to go and potentially take out new highs. This is the index that I'm going to be watching because it most closely represents the types of stocks that I own, and it'll give me a clue as to we have another leg up, or like the balls in the beginning, are we just going to have lower highs? Market themes. Well, it was a great week for the indexes, with most of them above 2%. Growth was back in style, at least for 1 week. We saw dropping volatility. Now, last week I was concerned or commented about how it seemed to be a separation between interest rates and the market, and that the market and the interest rate seemed to be overlying. And I think last week what happened was we saw some modest rise in rates, which would be bad for REITs and utilities. But what they signified to me was that the market was getting a little bit more confidence, and that as there was more confidence that we weren't going to war and more confidence that this pullback was abating, interest rates got back to that 2.6 area. And it seems that when they drop below 2.6, they're dropping because of fear of the market and fear of the economy being unstable. And so perhaps as long as they stay between 2.6 and 3, it'll be happy times for the market. Risk still exists. Both the NASDAQ and the Russell and laggards with nearby resistance, and they feel more like a counter-trend rally. But it's hard to ignore the large stocks. I put in there a comment about revenge of the industrials. When I looked at my buy list for this week, I saw such unusual stocks on my buy list, including things like, well, they're not unusual stocks. They may represent great companies, but they are unusual to make it to my buy list. And I would include things like Boeing, things like Tyco, Qualcomm, a lot of old-time stocks, Huntington Illis, which is an aircraft carrier and shipbuilder. So FedEx, stocks perhaps, and I called it the revenge of the industrials, but maybe it's the market refocusing where it's going to lead. And transports, especially the trains, and now I think brought into the truckers, are leading. So I'd like to give you a flavor of what I did last week and what I'm planning on doing this week. Last week I went bargain hunting, so I picked a few things up off the bottom. We'll see if they work, tight stops. I bought and played some tiddlers, biofuels and flood. They showed up on my high volume scan, which I'll show you today. On Tuesday, with the huge intraday reversal, I unloaded all my contras. Now, I'll be quick to go back in them, but after Tuesday, I needed to get out, and I got out. I have a lot of positions with married puts. The problem with married puts is when the market goes up, you don't make any money until you take out the top of the put. So what I started doing is either unloading those or more likely generating premium by keeping the put in place and selling out of the money puts against my married put positions. I also started getting a lot of energy names over the last couple of weeks. This week, I'll let the market dictate what I do, not what I think I should do. I monitor futures, the internals, and the contras to pick up early signs of a rally failure. Based upon my weekend review, energy, trucking, semis, and industrials look good. I can't forget seasonality because it's almost May. And whatever I do buy, if I buy, will have a very tight leash, meaning stops. Just want to remind everybody that this meeting is a go. I call it the HGSI Doc Summer Retreat. There's my contact information, Jeffrey at highgrowthstock.com. Dates from June 21st to 23rd. That's a Saturday, Sunday, and Monday in June. It's the weekend after Father's Day. I'm holding it at just one of the most beautiful places you'll ever go to, which is the Marriott Spa and Resort on Singer Island. Basically my next door neighbor. On the beach and on the intercoastal. It's in between with beautiful beachfront. My goal is to make this work for most people that listen to these webinars. I would assume a basic level of investment experience, and you should want to become an HGSI power user. But I'm going to create content or use content that's really at the advanced newbie range, and then I'll drive it up from there. For those that are true newbies, I plan on holding at least one, if not two webinars, depending on how many people need it, to review vocabulary and some of the basics. The goal of this meeting is to teach you to become your own guru. Here are some of the topics, very similar to what I do on my sessions, except being 3 days, really looking at how I look at the market, the different tools I use. I'm able to include in the $8.50 price for the seminar all meals on Friday. Excuse me, actually it shouldn't be Friday, Saturday, and Sunday. It should be breakfast on Saturday, Sunday, and breakfast and lunch on Saturday, Sunday, and Monday. And then we'll have high-speed internet access in the room included. 1 second. Group dinner Saturday night, and then a cocktail party on Sunday at my condo. If you are interested, and my wife just threw out, and barbecue. If you are interested in my TradeStation indicators, which I may or may not go to today, I normally sell them for $600 to $650. I'm offering them for an additional $250 to the base $850. If you are interested in TradeStation but are not currently a user, somebody from TradeStation will likely be at the meeting with a special offer, which I know what it is in advance. If you reach out to me. I really set 2 points of numbers. 15 is very comfortable. 25 probably makes sense because of the external speaker that will be there. But of the first 15, 5 seats filled the first week that I've offered this. So if you're interested, you probably need to let me know now, and I can give you information on how to sign up and pay for it. Let me make that announcement now then. I do have a commitment, at least from his wife. Now, I don't know about most of you, but my wife, if she commits me, it's more likely I'm going than when I say yes, because then I know it's going to happen because she'll remind me. But John Person is one of my neighbors. I mentioned his green book earlier. Highly recommend it. John will be attending and presenting. He'll be presenting his information, his some stuff either on Saturday or Sunday, and we look forward to having him there. I've got a couple other invites still outstanding for speakers. And now on to the charts, and I just wanted to point out that I've spoken with George Roberts of HGSI, and my intention is to do this live on Sunday night at 8 p.m. next week, April 27th. Okay. Last week I did a lot of charts at this point showing why I think we're going to bounce. And I mean, as I said, the bounce was probably the most obvious thing that everybody in any webinar was talking about. So we bounced. Now let's see where we're going to go. So first thing I like to do is kind of review what the market was like by looking at what happened last week. So first thing I want to do, this is basically a group performance analysis. And Friday night was the 11th last week, a week ago. So I assume that we bought these stocks in the various lists at the close of the market on Friday, and we sold them at the end of the week, which in this case was Thursday. Now I also do the analysis from Monday to Friday, and this was a case where there really wasn't much of a difference. So I'm not going to look at that today. First thing I then do is look at a lot of different groups that I do. Some of these groups are, I don't want to say the word because I don't want to be sued, but they're lists that I subscribe to from various websites. You can figure out what they are. The GAF All-Stars, we'll go through this at the end. It's picking the top 30 stocks of the week based upon some criteria at HGSI. You can see they outperformed with 3.14. The S&P was up 2.7 using the tool in the index weighting that I have here. HGS 100 and IBD 50 both outperformed, as did the stocks that were on my buy list and the stocks that were in my portfolio. On my buy list, I had 54 stocks last week, and they outperformed the market by quite a bit. And what I especially like is that 3/4 of them went up. Now, I actually picked the sell list, and you hope that it does worse than the buy list. And with the market turning around, my sell list still, most of them outperformed or were up, but it underperformed the market, which is what you'd want to see. Now, this is interesting. Best stocks under $15 underperformed. This is a preformed smart list, while those that were above 15, the higher price ones, I thought were right up at the top. Here they are. We're up 5.86. So does that mean the low price stocks were out of fare? It might have been for this week. Now you notice where it says 0411. These are things done over the weekend on end of day data from Friday last week. And these are all, anything that says 0411 on it to start are pre-planned, pre-programmed smart groups within HGSI. So I look at this, there's a lot more black than red. The performance of our favorite groups are higher than the S&P 500. So strong week, our stock's working, and that's a big change in the last 2 or 3 weeks. Hindenburg, these are signs of market tops. These occur when the pros are selling to us that are amateurs, and there's a number of criteria, and those criteria for Hindenburg are listed at the top. They include both new highs and new lows over 2.2%, a rising MA on the S&P, McClellan less than 0, new highs can't be more than twice the new lows. If all these criteria meet, you get a Hindenburg. Every major correction in the last 30, 40, 50 years have occurred after a series of Hindenburgs, but only about 1 out of 4 times when a Hindenburg is hit has there been a correction. So we had some Hindenburgs occurring back in December, and we haven't had a Hindenburg since. And if we look at our numbers, we only had 1 of the criteria hit this week, and you can see the new lows are quite low at 0.38, which would argue against Hindenburg based upon that number. Let's look at some other things that I like to look at. Bucketology. I thought I did an interesting thing last week where I took the peaks and valleys in the buckets and overlaid them on the S&P 500. And my hypothesis that I think I proved at least going back 2 years, and I'd like to go back further if time allows, shows that buckets extended to the top, meaning high number above the S&P 15, above the upper Bollinger Band, probably doesn't mean a whole lot. Because you can get sideways or reduce your angle of your rise, but you still go up. But when we get to see a lot of stocks trading below the lower band of the Bollinger Band in the S&P 1500, we certainly get a rebound. And I suggested that we'd rebound within the third day after Friday, and I called Wednesday to be the rebound day. And frankly, I think started a little earlier, started sometime on Tuesday. So I look at this, and I don't see anything 50-50, not meaningful. This is a list here where there's 4, this is all done in EdgeRater, by the way. You've got the percent B change of a number of major indexes. You have the percent B of that index, the bandwidth, and the percent B times bandwidth, which is Woody's buy and sell signal. And you can notice that you get ebbs and flows between buy, sell, buy, sell. And a couple things have occurred last week which make me a little bit more optimistic. The red stopped on Tuesday, or Monday, Tuesday, Wednesday, Thursday. It was only 4 days last week. We had a number of blue, which means we started getting movements of the indexes up more than 0.24 of their Bollinger Band width. So you start to see that in a bullish market. We actually had the first green dot. If you look back at prior markets, you get the end of the bearish period of time when you start to see some blue coming in. So I've got evidence on the EdgeRater markets that we're starting to see a change perhaps in character, and perhaps we'll get a rally. And these rallies last for several 15, 20 trading days, so we'll see what happens. This has been a rather long period of pain for the markets. Now, for those that follow George Lee, built into EdgeRater, I'm not going to spend a whole lot of time on it right now, are signals both daily, weekly, and monthly, where you can go through your list of stocks, identify those that are in a squeeze, and those that are in a squeeze, which also have other evidence of a breakout or a breakdown. You can do that daily or weekly. And then those that are fans of Gil Morales and Chris Hatcher, they built into EdgeRater, Chris White. Chris Wilson's a user, who's done some interesting relative strength work, built in some worksheets where the stocks that are meeting some of the Morales and Hatcher ideas for their methodology come to the top. You can look at code blue for the buys and code red for the sells. And then I do my group inclusion filter, which identifies the stocks that show up in the highest number of the bullish groups. And you can see things like Gentherm, Continental Resources, GasLog, SanDisk, Halsys Automation, Micron, Matador, and so on and so forth. And we'll go back to this later on. So that takes care of that. Out of curiosity, I ran a scan within EdgeRater this morning to get an idea of what's working in the market right now. So I figured that we had a reversal occur this week, so I wanted to use data. And I do this, I save the data every Friday, and the data I'm specifically looking for are the boxes. The rest of the data is the actual date from the performance perspective. So I pulled my all securities from this past weekend, and I looked at from the reversal, well, actually from Monday to Thursday, and to get an idea of what's working and what's not working. And then I'll show you how I did that in a second, because we'll just do it the last 3 days and see if it looks any different. And what I saw was there's linearity here between low ERG to high ERG, but the higher the ERG, and the extremes have very few stocks in them, by the way. The higher the ERG, the better the performance for the week. That makes sense. EPS rate was pretty linear until the highest level, so earnings mattered. Relative strength has been the leader over quite some time. Relative strength was good for performance. And you're looking at the various buckets, deciles versus performance. Group rank this week probably didn't mean too much. This is interesting. The stocks that had gone into the week distributing actually outperformed. So that's probably a sign of some bottoming action where things that had been beaten up perhaps started to turn around. And then for those that are not box fans, and I talked about boxes last week as well, the non-box stocks were up about 1%. And this is 8,000 stocks, much beyond the Russell or the Dow or the NASDAQ. And the leaders, pretty much any box category, outperformed. And box 7, which is my favorite to turn around, was one of the best, which is not that surprising. So the way you do this is really cool. You have to have the file. So let's say the market turned around Tuesday. So let's look at performance from Tuesday, Wednesday, and Thursday. And hit OK, and let me just, all securities. And now I'm going to hit run. Now it's basically going through my data, looking at what happened the last couple of days. And you can set these criteria for anything you want. And so first thing that I learned was the high ERG stocks really outperformed since the market turned. So the highest, let me say this again, over the last 3 days, high ERG stocks kicked booty, 6% for the highest ERG up. So ERG clearly seems to matter in what we saw last week. EPS rank matters, and relative strength rank since the market turned. So we want to concentrate on the highest relative strength stocks right now. If we look at accumulation distribution, again, you can see that just for the last 3 days, some of the distributing stocks were the ones that performed the best. And again, all the boxes performed better over the last couple of days than the market as a rule without. If I look at those boxes, you can see the majority of the stocks in the market are not in a box. But my favorites, box 7, box 1, box 2, time in and time out always seem to outperform the market as a whole. At this point, I'd like to quickly jump into my TradeStation and get an idea of what's going on with a couple of my favorite things. If you're a TradeStation user, you notice that I use a lot of John Person things. And futures are not open yet, but I wanted to look very quickly at my Commitment of Traders report. And actually, I think this was spot on last week, and it won't project well, so I'm going to tell you what I see. This is the S&P Weekly. This was back in 07, 08, 09. As I've talked about frequently during the time that the market was dropping, yellow representing us small buyers. We were buying the whole way down, where blue, the institutions, and the hedge fund managers, the experts, they were selling. At the bottom, we switched to a sell, and the institutions and hedge fund guys switched to a buy. And what I noticed over the last couple of weeks was that it was all in for us little guys, and you can see the peaks here much higher than they've been, and the institutions went to negative. Now last week I commented that the institutions and us had closed ranks, and both of them were about net neutral. And I think what it said was the market was going to turn around, that the negativity started to abate on the experts. As we saw here, the experts started jumping in before the market bottomed, so they could be early still. But I feel a lot better this week than I did 2 weeks ago. On the elder indicators, I look at the major indexes and get a sense of what if elder says it's okay to buy. So on Tuesday, we had a hammer, Wednesday and Thursday blue bars. So we got blue bars, which allow you to do buy, selling, or holding. We did reach a lower low, and I wonder, we get a horizontal line. All right, let me try that again. There we go. So we got a lower low, but we got a lower low on the MACD line and probably a lower low on the MACD histogram. So there's no divergence here. But we've turned blue. We're in a channel here, and it's very possible that we're going to get resistance on the NASDAQ very soon, which we'll look at in an easier platform. Still red on the weekly. So the NASDAQ's still unhealthy, although it's obviously popped back from last week. The Dow looks a lot better. You've got green, green, and blue, and you can notice that the strength of the bears was much less than before, and especially if you look at the lines, there's clearly a bearish. I would still call that a divergence. John in his book would call that a bullish convergence, where you've got higher MACD, and that perhaps we are starting to see some improvement in the Dow. I'm not sure that this is anything here because this is the prior low and we did not take out the low. But we've got greens, which tells you you can be buying big stocks. As I said, this is the rise and return of the industrials. Spiders, also green, green, and blue. So it looks like it's bouncing back. And then if we look at the Russell futures, since for whatever reason TradeStation doesn't give me Russell anymore, what you see is also blue. So the NASDAQ, the weakest red on the Russell here. So small stocks are weaker than the big stocks. This is really the heart of my TradeStation story. All my indicators, they're charting, they're scanning, and they're also radar screens. And for those that don't use TradeStation, this to me is the reason why you do TradeStation. A couple things here. One of them is the fact that to the right of my highlighter, these are people that have written code for TradeStation. Thinkorswim does not copy protect your code. Think about the sharing ability. And so what we're doing here is we're showing that there's a number of, this is a guy named Hamphone, this is from, where are these from? It's called Fibonacci. I've got ARPS indicators and Hawkeye. So you have a number of companies that are programming things into TradeStation and selling them. You can also use your own programmers to program things, and I programmed in the things that matter to me: pocket pivots, green candle lows, red candle highs, ISO failure squeezes, mobile breakdowns and breakouts, and Bible gap ups. And then I sit there with 1,000 different things. I don't think I have 1,000 in here today. What do I have? I've got 836 entities here, and I'm scanning during the day. I'm scanning looking for Bible gap ups. So I have my indexes, my overnight futures, and then I find a little bit more sensitivity, although you get whipsawed a lot, in the 3X bulls and bears. So I monitor the bulls and the bears. I monitor the sectors. And then I get into stocks that I might be trading or owning. Or, actually, I realized I did that again. All right. And these are stocks that I'm currently monitoring. And so basically during the day, I can tell you, for example, who's got Bible gap ups. Now the gap occurs immediately when the volume moves up during the day. At 100%, I meet the criteria of 150% of the 50-day. So I can get an idea of who's likely to be a Bible gap up. I can look at green candle lows versus red candle highs, get a sense of what the market's doing. I can look at mobile breakdowns. I can look at mobile breakouts, each of these occurring in the setting of a squeeze. So here's something interesting. WSO had a pocket pivot. It had a squeeze with the mobile breakout and a Bible gap up in the same day. And so then I would go to my chart indicators and I would start to take a look at this, and you could see it here. And what I found that the benefit of my intraday charts is it helps me figure out when to buy these things. Obviously, it had a major gap up, pull back down here, and close up for the day. And it's an expensive stock. And you notice that just like in HGSI where I like the colors, I have a thing called my dots, which has the Bible gap up, the pocket pivot, the mobile breakout, the squeeze, PSAR flip to green. It did not have a red candle high or a green candle low, and it did have a forced kahuna. And I can monitor those all in multiple different time frames. So I'm using this radar screen to study the market during the day and to help me not only monitor my own holdings, which I'll have to build in here before I get done, but also monitor what's going on across the market. Another thing that I like a lot about TradeStation is when you create buy lists for your own list. And again, this doesn't project well. I apologize for that. But I'm able to, let's see if I can change that format, color, date, time, and duration. So time. I got to play with this around so I can change the background, but I can plot earnings dates and how many days until they occur, and then before the market or after the close. So that way, when I'm looking at buying something, I'm not going to get a big surprise. And then I have my buy list put in here, and we'll talk about that later. So enough TradeStation for now. The advantage over Thinkorswim is that the servers, excuse my French, suck on Thinkorswim. And if you try to do a scan or have a big market watch, you notice you get a lot of waiting until they get sorted out and they fill in with numbers. The other advantage is the 1,000 versus about 100 that you can monitor at a given time with that many columns in Thinkorswim. One of the other things that I use, and I'll spend some time with it at the meeting that I do in Florida, is I'm all interested in this what's working now phenomenon and looking at relative strengths of various sectors and trying to buy what's working the best at a given point. And one of the things that I've had a lot of fun with is using eSignal and some indicators that I got and basically creating spread charts. And one of the things that I'm able to figure out is what's working by these spread charts here. Sorry about the background phone noise, but my wife will answer the phone. Where I'm able to compare, for example, diamonds versus the spider. And not only can I compare them, I would be able to come over here and I can actually chart a comparator of, this is diamonds over spiders. This is the spider by itself, and the fact that it's in an uptrend should tell you that the diamonds are outperforming. And then I look at the score, and the highest scores are the ones that are outperforming. So the left is outperforming the right. So I can see that the diamonds and also oil drillers are way outperforming the spiders. EWD, now I can never remember what these things are, so I come down here and I plot EWD. So Sweden, for whatever reason, is underperforming. So if I was to look at that one, you would see, well, you see these red bars here, which tell me it's in a downtrend. So it's underperforming. I'm going to stay away from the charts because they didn't come over in the right size. I could look at other things. I could see that the Qs, where were they? I just looked at them. are right here are outperforming the spiders. Well, we know that because, as I showed you before, big stocks are leading. I can look at other things. I can look at various countries. What's working? EWS and EWT. Well, what are they? So EWS is Singapore is doing better. Taiwan is doing better. So we're seeing a lot of the markets doing better than the U.S. I can do spread charts here saying gold and spiders are doing about the same, but this tells me here with the -6 that right now the gold miners are doing worse than gold itself. And so I've got a number of different things here. XBI, biotech, no surprise, underperforming. XHB, home builders, underperforming. XLP, what are XLPs? We go have to find them. And XLP, which is consumer staples, are outperforming now. XLU, utilities, are outperforming now. So basically, I can make spreadsheets. I can look at USO versus DIG, oil versus drillers. Oil is strong, drillers are stronger. -5, it's favoring the DIG over the oil. So you're better off buying oil instead of buying DIG. I mean, you're better off buying DIG or buying oil producers and drillers than you are buying oil itself. One of the things that we'll talk about at our meeting is how you can create this in HGSI. I mentioned Chris Wilson instead of Chris White before. He's created some neat charts that you can do that type of stuff in HGSI and look at the various relative strength comparators between different industry groups, sectors, indexes, etc., or even a stock to its index. Now let's jump into HGSI for a top-down review. Start in my warehouse view, excuse me. And I'm going to come back to this one that I did with George Lee the other day. But let's go down to user groups, and let's pick Major Markets Plus. T1 is the view that I like to use because this looks at all technicals, but not just the last day, although it's heavily weighted to the last day and the last week. Gives me a sense of what's working and what's not working in the market. Transports leading. NYSE up there at the top. On the bottom, gold, silver volatility, the dollar and bonds, and the rest of the stocks in the middle with small stocks underperforming the big guys. Semiconductors were strongest on Friday, Thursday led by SanDisk, and we'll look at that. Small caps had a good day in the Russell on Thursday. We'll see if that's meaningful as we go into the week. Over 5 days, transports led. Now, I looked at only 4 days in the market and got 2.4 for the S&P 500. Since it wasn't open all 5 days, you could see that last Friday was a bad day, and that pulls those numbers down. But the S&P and 100 and 1,500 up at the top. Volatility, gold and silver, and volatility got crushed this week, down 16%. I like to look at the same group every time, so let's start with the S&P 500. So I'm going to introduce you to a new view today. It's not that different of a view, but I kind of like what Ron did by making the charts white. I think they project better. So I've got done a couple different things here. We don't want, yeah, it's not going to work because I didn't. All right, forget that. Next time, I meant to move my. I've got to bring one of my filters over. I'm creating a new view that's white, and it takes the pocket pivots out of the chart so that it doesn't clutter things up. So here is the S&P 500. Last week I talked about, does it pull back to the 200? God, I hope this isn't prophetic. Or do we turn around and go right back up to the 50, at which point we'll either break through the 50 and take out new highs, or we'll break down and go to new lows. We're here. and it looks like we're going up towards new highs. I hope that's where we end up and that we don't turn around and go back down. It'll be interesting to see that the market actually does behave the way it's supposed to behave. And as we all know, we're in a big uptrend. I don't want to spend too much time on the indexes today, so very quickly, S&P 500 broke above the 17-day. You're going to have resistance up here, which you'll have to get through, but it's above its moving averages, which 8 days looping around the 50. I think the S&P 500 tells me it's okay for me to be long. I can look at the Dow. Will look a lot like the S&P 500. Doji on Thursday, but the right order of things above the 50, above the 200, above the 8, the 17, crossing through the 8. What isn't so pretty is the NASDAQ, and you can see the NASDAQ had a 10% essentially pullback through intraday on Tuesday, and you could see the Dragonfly Doji trading right down to that 200-day moving average. When that started going up, I started unloading contras and starting to go long. Now, here's the problem, in my opinion. I could draw a trend line there, draw a trend line here, all kinds of trend lines I could draw. Bottom line is we're in a down channel. And for us to get out of that down channel, at the minimum, we're going to have to take out that 17, but we're going to have to get up above that 50. There's a lot of work for this NASDAQ to do to become bullish. So right now, counter trend rally, we'll see where it can go. Russell 2000 will look a lot like the NASDAQ. It went right through the 200 but closed above. It too has a lot of resistance to get through. So I feel good about the big stocks. I'm still a little bit worried about the small stocks. We like to look at things such as volatility. As I already told you, volatility smacked down again on Tuesday, Wednesday, Thursday. We'll wait and see where it bounces from and when it bounces. When volatility is falling, George Lee says you should be buying. Gold, struggling to get back above the 200. So had a nice rally up. It's faltered. It's still faltering. Silver, even more below the 200. Reversal of the moving averages of 50 below the 200. I'm not convinced that either of these are ready yet. The dollar tried to move up last week, and it sort of petered out, which is probably good long-term for the stocks. Just out of curiosity, that's not what I want. As I told you, I got way too many programs. So let's go to so the interest rates, let me give us a lot more. This is let's go to weekly. So interest rates at 2.721. So we have pulled back on interest rates off the 3. I think that the market likes it when we're between 2.6 and we're in 3%. And when we get down below 2.6, I think we start to get into a period of time when people wonder what the Fed knows. If I throw the S&P 500 on top of this, this is what I said, the interest rates were sort of going in the same direction, and then something happened when they broke down below 3. As I said, this is what the market likes, and interest rates went up. I think that dropping interest rates, when they drop too much, spooks out a lot of people in the marketplace. So I'd love to see interest rates live between 2.6 and 3. A couple of other things that we looked at yesterday. Warden's got, these are called the T-charts. Let's see, components. Let's see if I can find them here. I can never remember what they are, so for company names. So we can look at, we looked at this one last week, and I talked about, let's see that many. We were getting to the point where on a trend line basis, we were where a lot of these things started reversing from. And we bounced off of it last week. Looked prettier last week when I did that. I also looked at the McClellan oscillator. Let's see if we find it. And we were at -1. We closed last week, I think, at -130, 137. We're now up to 47.53. That's when I had the pretty trend line on. My apologies. Where it really looked like that would be where we would bounce from, and we almost got there during the week. So the market has bounced. You've got perhaps a separation between big stocks and little stocks, and it'll be interesting to see whether the little stocks catch up or the big stocks falter. After I've looked at with the T-view, I like to go down to industry groups. You can see we have 149. And this shows you what's been working over the last 3 or 4 weeks. Oil and gas names have been really outperforming. Trucking, as I said, has come up. But I don't really care about 3 or 4 weeks. I want to know what's occurring right now, so I use the 2-day force. And I see what's working now. Oil and gas for the top 11, 12. They've got 4. That's pretty darn strong. I noticed regional banks were coming up. You'll notice that pharma and biotech are back. Well, they're kind of back. So let's quickly look through the best of the best and go through the top 10 or 12 lists, and then we'll go on and do some of the other things I like to do. So one thing is oil and gas is all over the top. Now, I own a bunch of these names. I'm sure you own them. I'm only looking at the ones that are at the top, and then I'll point out a couple of others that I liked. So to remind everybody on my charts, let's do a couple of things here. I'm just making my PSAR dots a little bit less than 10. And I'm going to do the same thing for my pocket pivots. I guess I can't. All right. All right. So my charts are all the same. My charts have we start with moving averages. We'll go up here when the order. Purple is an 8-day exponential. 17 is the green is 17-day simple. The red is a 200 simple. The blue is a 50 simple. These blue bars are pocket pivots up. The magenta ones are pocket pivots down. Obviously, I use candlesticks. This line here represents a industry. So I'm plotting the strength of the industry along with the individual stock. And I've got Bollinger Bands in here just so I can look at them. So there's a lot of stuff there, which is why I'm cleaning it up. At the top, I got my bongos, weekly and daily. I've got my force, week 13 and 2. So I'm looking for the green one, the longer length one to stay green during an uptrend, and the shorter length ones go red, showing me a pullback in an uptrend or vice versa. And then I have accumulation distribution. So group strength on oil is obviously strong. Cabot's beaten up, perhaps put in a double bottom. Here had a kahuna on Wednesday. Wants to break above its 50. Not my favorite of the bunch, to be honest with you. See what else we can find. Athlon Energy, one of my favorites to the bunch. You can see, let's give it a little bit more data. So this was an IPO back here in 13. Nice run up. I believe it was an IPO. Let's see. Yeah, it is an IPO. And you can see everything's green on the technicals up here. This one here is a Bible gap up. Yellow is a squeeze. These are mobiles. She had a Bible gap up on Friday. Massive volume, in an uptrend, makes money with great earnings per share growth. Alkaline Energy is one of the energy stocks I like. PXD, this is an older energy stock, but also a nice start chart here. Long base, sort of a cup and a handle, breaking out here. Everything is green. Much more expensive stock. Chesapeake, very similar pattern, basing, breaking out, pocket pivots, everything is green. This is all with the same feather flock together, and this is a bunch of flock that's doing well. Here is Ultra Petroleum, long base, moved up, pulled back to the 17, and back to, Ultra Petroleum. You can see it pulled back to the 17-day, and looks like it wants to run again. Logo breakout here, everything is green. Kahuna on volume on Friday. Canaries Energy looks like the others, sideways consolidation. In the last 5 days, 4 Kahunas, everything's green in the Bible gap up. Cheap one looks like it wants to run. There's a lot of great stocks in this list. Right now, this is what's working. A couple of ones that I've also been looking at, Triangle Petroleum, pulled back, coming out of a squeeze here, had a mobile breakout on Wednesday, or Tuesday rather. Huge volume coming into the stock, a bunch of Kahunas, a Bible gap up on Friday, everything is green, like that one a lot. Another less expensive one is Kodiak, I believe, K-O-G. Let's see if I can find it here. You do realize it's hardest to see something that's in front of your face. And it's about to take off its prior tops, could go up to $15 or $16. Everything's green, it makes money. So I could go through all of these. Suffice it to say they're all very similar. Find your favorites. Then there's a couple of them that I just don't understand. All right. Here's one of the ones I don't understand. This is Lynn Energy. It got decimated. Had a pocket pivot Bible gap up on Friday. Lynn Energy pays a 10% dividend yield. Another one that struck me as being interested, these are trusts. This is Sandridge Permian Trust. Clearly in a downhill, but if you look at, there's not a whole lot of movement in price. And this guy pays a 20.6% dividend. I've already sent an inquiry to my oil expert, Lou Powers, and hopefully he'll get back to us with an answer. If he doesn't get back today, I'll include it next week on my video. Heck, if that is real, and if it was safe and not something that's being wound down and going to be worth zero, maybe we should just all buy it and stop the rest of this game. That's a huge return. All right. Next group to look at, Internet Software and Services. Yahoo. Yahoo, I still don't believe it's anything to do with how Yahoo's doing, but Yahoo's got the Alibaba IPO that's going to put a lot of money in its pocket. Trading down sort of in a range between 250, not that exciting. Cena Corp, I call this one a bottom fish choice. You can see technically it's been a disaster with all the red up here. Some green on the daily Bongo and daily Force. It did have a mobile breakout for whatever that means in a pocket pivot on massive volume on Friday. This is one that had been in a huge uptrend and then died. Uptrend here, died in 11, and is struggling to come back. Probably not something that I'd be playing with, but if you're a bottom fisher, not a bad looking pattern. Yandex, Russian internet site. I guess this will fly with what happens in Russia and whether or not things quiet down. It's 142 on Sunday and there's not a war yet. It had a bottom fishing pocket pivot and a Kahuna as well. Twitter, bottom fishing pocket pivot and Kahuna. So a lot of these are beat up names. You know, LinkedIn, my favorite stock to short, but you want to short it when it gets up closer to the 50. We'll see if it runs up to the 50, gives you another opportunity. YY, another one that's been hammered. maybe it's trying to put in a bottom and go north. So this is a list that I don't find that exciting. These are a lot of destroyed stocks that had a good couple of days. Sort of that D&E accumulation stocks moving back up. Semiconductors, do like this group. In fact, there's several of these that might be something you to be looking at. Micron, we've talked about this the whole way up. Is it giving you a new chance to buy? It had a mobile breakup from the squeeze and a kahuna on Friday. A lot of green up here. DI crossover, breaking above the 50 with a PSAR reversal. I like Micron. It makes money in outer years, going out 18 months. Its earnings per share growth rate seems to stall at about $3 per share. But if it gets a multiple of 12, that could still be a $36 stock. I like Micron. I've liked Micron the whole way up. Taiwan Semiconductor, in a nice bull run, everything is green. Mobile breakout and a pocket pivot on Friday. I probably have to do more research and understand its upcoming earnings. Clearly in a nice move. Intel, old Intel, leading the charge here, getting into multi-year high territory. Hard for me to get excited about Intel, but it's a leader right now. Others that I liked, expansion, don't know anything about them, but I love the pattern. A little bit of a pullback, broke out with a global breakout and PSAR reversal from the squeeze on Friday. Everything's green above, big kahuna and lots of volume. Something's happened with code, probably worth taking a look at. Rambus, I remember this stock for years. In a nice steady uptrend here at a big day on Friday, everything is green. NXP, this was a big leader in here, stubbed its toes. Could be at a good point to look at. Everything's still red, but it's starting to squeeze down on the 50-day moving average. I put this in my pullback waiting for a signal because a kahuna, pocket pivot, a Bible gap up, the stock goes back into the 60s. And I love Freescale. It reminds me a lot of NXPI where it's going sideways. Look at the fantastic earnings per share growth. But again, wait for it. You've got a squeeze occurring now, but you need to see more than just a squeeze. We need that PSAR reversal, the mobile breakout, the kahuna, something that tells me the stock is starting to move. Next group down is internet retailers. Interesting day on Friday. I bought 3 spreads, CMG, Netflix, and Google. 2 made me money. Netflix was one of the ones that made me money. Netflix is at a perfect or not so perfect buy point. It's a perfect buy point because it's facing down. Short couple of days seems to be stopped its fall on the 200-day moving average. Was up 12 bucks or 14 bucks on Friday. There's no reason I can see to buy that stock right now. I think there's a fair chance it will run up to the 50-day moving average and test. But we've got earnings coming out in the next day or so. This is not the best quarter from a seasonality. So I'm just going to take my profits on my spread probably before earnings come out and not bet the farm like I did in January. Amazon, failed at the 50 here. It's in a downtrend. I'd rather wait till it came back up to the 50 and tested it before I shorted it again. Bottoming tail on Tuesday. We'll have to see if this is going to pull back up. It does start to have earnings per share coming in. Price line, it too broke below its 50-day moving average. Not nearly as deep of a pullback as the others. As it put it at the bottom, wants to go north. Wouldn't surprise me. Pharmaceuticals. You're going to see a lot of things, I think, on Monday with this group. Pfizer mulling a bill for AstraZeneca. That's a pretty big deal. Here's Allergan, makes money, nice uptrend, expensive stock, pull back in the biotech wreck, and has had 5 days in a row of a big move up. Abbott, deep pull back to the 200, moving back up. Kahunas. I don't like this stock. They took out the growth and put it into AbbVie. Pfizer, maybe this will get a jolt with their potential AstraZeneca. Don't like it. It's all red, but I do like the fact it pays a 3.4% dividend, and they're not going anywhere. Teva, this was a stock that was dead for all of 13 and has had a great move from 40 to 50 this year. Looks like it's pulled back to 50 and wants to run again. I'd like to see some momentum come in with the Kahuna, pocket pivot, level breakout, etc. Here's AbbVie. AbbVie acts more like a biotech. It's gotten destroyed down at the 200. Long term, I like this a lot. They have Enbrel, which is a, not Enbrel. They have Humira, which is a rheumatoid arthritis and related drugs all-star product, related disease all-star product. They also have a drug just like the Hep C drug from Gilead coming to market, and a CLL drug for leukemia just like the Pharmacyclics drug. Like them a lot. Atavis gave you perhaps an opportunity to buy it back here at 190. I need more information. It's still in the downtrend. I want to see Kahunas, pocket pivots, viable gap ups, global breakouts, but it's starting to squeeze and maybe setting up, getting ready to become viable again. Valiant, deep pullback to that 200. If you're a betting person, this might be a place to start nibbling. It's got great earnings per share growth. It's pulled back to major support. I don't think anything fundamentally has changed with this company, and they want to become a big player as a major pharma. Deep pullback. I think they're going to run again. I have a position in them. And then Jazz. Ugh. You know, chart looks similar, though it didn't pull back to the 200. Do your own research. It does make a lot of money. Jazz started part of this, Gilead part of the problem with biotech wreck because of the letter from Congress. But Jazz also stimulated some grief because of the reverse merger into it becoming an Irish company and the government starting to look at those and the tax implications. Next one down, communication equipment. Qualcomm being the big leader. I like Finisar as well. You know, perhaps it's difficult to get excited and buy Qualcomm, but you can't ignore the lower left, upper right breaking out again, squeeze mobile breakout, everything is green. You know, makes money, beautiful stock, beautiful right now, a humming company. Finisar, perhaps a little bit more attractive to me, pull back to the 50, pocket pivot, and a breakout on Friday with two kahunas, excuse me, Wednesday and Thursday, breakout on Thursday. Good earnings per share growth. I like Finisar a lot. I think it's a Gil Morales' stock. Hopefully Gil won't sue me for using his name, but I just think Gil and his pocket pivots and the gap ups are just fantastic, as is his website, gilmoreport.com, in virtue of selfish investing. UBNT is another one that got hammered down to the 200. It might be getting ready for a move, but this is bottom fishing, and you need to see a reason to get in there. I don't see it yet. Back. Other diversified financials, a lot, the big guys. So Citigroup, which is one a lot of people like to say bad things about, below the 200, not too interesting. JP Morgan, pretty deep pullback to the 200, not too interested there. Financials have been weak, and Bank of America included, but I think a lot less weak. Did not quite get down to the 200, but they're all in one of their downward moves, and you need to see something happen with these, I think, to want to jump into them right now. Electrical equipment. Oh, good, plugs here. Emerson Electric. Man, I remember growing up and they made inexpensive plastic electronic things. I think they must make stuff for other companies right now. Let's look at this in a weekly. From July until now, 12, so you got a little bit less than 2 years, a nice run from 45 up to 70. Continues in a steady uptrend. This is one of Kramer's favorite companies. He talks about Emerson. As I mentioned, a lot of the old industrial names are starting to work. Pull back to the 200, tested it 1, 2, 3 times. This time it's for real, the old Southside Johnny song. Everything's green. Global breakout followed by a pocket pivot on volume. Looks good. And then here's Plug. As I said, I played this one this week, and I held a position over the weekend. They've got some news Monday, which may be big. Some people think they're going to announce a deal with Ford. They're a fuel cell company. Ballard Power, and there's another one as well. I can't remember. This is just a great stock to play. Should have found it in December when the volume changed. We're going to talk about volume in a few minutes. I found it back in the 3.5, 4 range back here. Actually here. Mobile breakout from the squeeze, everything turning green in a kahuna. I ran it up to this date. I sold out in the wick. It's been hammered. But now you're at a point where that PSAR is sitting at 762. If it gets above 762.5, you'll have the PSAR reversal. You've already had a mobile breakout from the squeeze. I think this is getting ready to run, and that's why I took a position for the week. But I think you want a safe bet is to wait and see if it breaks through that PSAR reversal. PSAR reversal is a stop and reverse. I use it as a buy, sell, or no buy or no sell. I don't want to go against it, but people use it for stops. People can use it as its own buy-sell system. Excuse me. Regional banks started to move this week. We'll look at a couple of these. It's in my notes. PNC looks a lot healthier than the big banks, above the 50-day moving average. Frankly, not that exciting. But, you know, a lot of things are going to look like this because we just went through several weeks of a tough market with a lot of pullbacks of leaders. See if any of these really stood out. East-West, I think, looked better. The same thing, gradual uptrend, pull back deep almost to the 200, broke above the 50 with pocket pivots, mostly turning green there with increased volume. I think these do well in a rising interest rate environment, and don't know too much else about the banks. Then we'll get a couple of energy names, refiners. Here's biofuel, which is that other tiddler that I've been playing. What a pattern. What a high risk story. You had no volume whatsoever back to the left here. Something happened here. This was, obviously been nice to have found it here. I bought into it on Tuesday when it pulled back to the 17. You can see what it did on Thursday. Had a Bible gap up. Everything was green. Big kahuna, massive volume. This thing would not surprise me to see it run up to 11 or 12. Also wouldn't surprise me for it to blow up. On the refiners, starting to have a big move across the boat. Here's Valero, a leader, closed at a multi-month high. Everything is green. Kahunas on Tuesday and Wednesday. Makes money with some increased earnings coming in. Kinder Morgan is a midstream refiner, 4.9% dividend yield, but it's below the 200-day moving average. Tesoro also just breaking above the 200. Everything is green. It pays a 1.9% dividend. So far, I like Valero the best. I own Western, sort of a sideways consolidation here. Maybe this is a couple kahunas into the week. Everything is green. Mobile breakup from the squeeze on Wednesday. Makes money. This is one, as I said, I own this one. Pays a 2.5% dividend. So the refiners look interesting. Equipment and services look good as well. I look at Baker Hughes, Halliburton, and I don't know which Neighbors is in, but Neighbors is probably the one I like the most. Baker Hughes, expensive stock, Bible gap up, big gap up rather, Friday on a pocket pivot. Everything is green, a kahuna, tons of volume. It looks like it must have earnings come out. Let's see. More info from Webb, FinViz. Improving North America drives their earnings, rig count unchanged. Right, so it's up big on earnings. Halliburton is in Schlumberger. Halliburton's got earnings this week. It's one of my big holdings at a multi-year high. Pocket pivot, all green, coming out of a mobile breakout earlier in the week. And Neighbors, which is probably a different group, but let me just bring it up here. One of my favorite charts, sideways consolidation, and Looks like it wants to run again. Coming on the mobile breakup from the squeeze on Wednesday. On Thursday, I had a pocket pivot, a PSI reversal, and a kahuna. Look at the earnings per share coming into the stock. I like Neighbors Industry a lot. And take a look at the other groups going down as we go further. Biotech. I think this is the question about biotech. This stock right here. This is Gilead. Is this a buy or is it a sell? If biotech is rebounding, and you see it moved up on the list this week, then you've got a stock that is sitting on the 200-day moving average, is off its highs. I would just say a lot, but I guess I can do a better job than that. We'll just call this its high day here. Had a pullback of 25%. It closed about 18% off its highs. It had a bingo. You know, if this stock gets any kind of movement, a kahuna, and moves up, I think this is the signal of all clear or not. And it's not signaling yet about whether or not biotech gets better. Alexion, you're going to see the same pattern, pullback. Doji, under the PSAR dot. Biogenidec, deep pullback. Last couple of days seems to want to go back up. It's still in a downtrend. Celgene had a couple of good days last year. Is it putting in a bottom? I'd like to think so. Don't know for sure. So you've got a group here. It needs to tell you that they're putting in a bottom before you start going crazy. I might look at those leaders I just said to look for evidence that something is changing. Trucking, I liked Hertz and I liked Arkansas best. So let's look at those real quick. Hertz has gone sideways. I got out of it with the market turbulence. Probably cost me more money to get back in. I think I sold it around 26. Everything's turned green. Mobile breakout from the squeeze on Wednesday. Bumped up again on Thursday. Kahuna on Wednesday. Makes money. Leader company. Doing some spin-offs of some equipment companies, which may help the stock. I'm going to be looking at that one. Why? Mobile breakout squeeze, kahuna, and a PSAR reversal. I like some truckers. You'll have to pick your favorite one. I like Arkansas. Nice consolidation here. Mobile breakout from the squeeze on Wednesday with a kahuna. Everything is green. Takes out the PSAR here. So I would set my buy stop on this puppy and say $38.95. If it takes out $38.95, I want to be in this stock. Lower left, upper right, relatively tight for this market. Not a deep pullback. Makes money. Looks interesting to me. And I also like SAIA as another trucker pulling back to the 50. Mobile breakout from the squeeze on Friday. The 2 makes money. So that's my top-down analysis, just for summary's sake. The market looks, especially the big stocks, poised to go up further. The little stocks worry me. I mentioned something about the industrials. Let me show you a couple of the stocks that I liked. Go back in here into my buy watch. So let's do a couple different things. These are the stocks that I looked at 600 charts from after going through multiple screens to bring 8,000 stocks down to 600. And I couldn't make up my mind. There's actually 76 stocks here that made it into my look interesting list. If we look at by industries, oh, I don't think I want to do this. Let me see. If I look by industries, you can see oil and gas, communications, semiconductors, refiners, auto parts like Gentherm and trucking. If I look at major industries, you could see the dominance of energy stocks on the stocks that I looked at. There were, however, a number of stocks that are not typical for my list. Let's see. Here's an energy stock that we haven't mentioned yet, but I'd like to mention it specifically that I like a lot. This is Diamondback Energy, also known as FANG. Lower left, upper right, great earnings per share projection. Best name in the marketplace. Pocket pivot last week. Everything is green. This is a Gil Morales stock. It's one of my favorite stocks, and I think certainly like the pattern a lot. Let's see. Manitowoc. Nice pattern, lower left, upper right. Pull back to the 50-day moving average. Level breakup from the squeeze and the PSR reversal on Wednesday. When I think Manitowoc, you should think URI. Same pattern, except their earnings came out on Friday. They blew them away, had a big gap up, took out the PSAR. I like MTW because MTW, I think, is going to behave just like URI. Tyco International, so I consider this like Emerson to be an old standard industrial company. Obviously, they've had a lot of acquisitions and spinoffs. It's an industrial conglomerate. You know, the technicals don't look great up here, but I have a stock that was in an uptrend, pulled back. It's now breaking above the 50. It had a PSR reversal, a mobile breakup from the squeeze. Multiple kahunas. It makes money, and it pays a 1.5% dividend. We haven't seen Tyco on my list before. It looks kind of interesting to me. I mentioned Huntington Illness, I think it was called. Let me find them. Huntington Ingalls. This is a shipbuilder, defense contractor stock. And you could see on Friday it had a mobile breakout from a squeeze, a kahuna in volume in an uptrend off of the 50. I like this one a lot here. It pays a teeny-weeny dividend that's insignificant. What else did I want to point out? Motor Car Parts of America. There are a number of auto parts companies that look interesting. This is one that I think may have even made it to our current index. It's pretty tight, lower left, upper right. Global breakout from the squeeze Wednesday. Doji on Thursday had a kakuna on Wednesday on huge volume. Everything is green. Great earnings per share growth. I like that one a lot. And here's UNP. I mentioned transportation besides trucks. Here's a train, big up, a railroad stock, big move up, pull back to the 50, big engulfing day on Friday, in a pocket pivot, multiple kahunas volume, turning green up top. I think this one wants to run, and it pays a 2%, 1.9% dividend. So a lot of good-looking charts here, frankly. Natural gas, Lou Powers, who is our guru for oil and gas, he posted a comment on natural gas stores, the lowest they've been in years, and that they may have trouble refilling them before the winter season. I think it's related probably to the cold weather we've had, and that prices will rise. Well, if you believe that, can you find a better time on this chart to buy UNG? Yeah, you want to buy it here at the lowest, but you've got basing, you got a mobile breakout off the 50 with a pocket pivot, a kahuna, and big volume. This is UNG. And if you really like to gamble, you can get the triple and go for the ultra short of gas, UGAZ, which I still don't know what we call it. 3x long gas. Same pattern, will be more volatile. Kahuna, everything's green as well. All right, looked at a lot of stocks, couple of shortcuts just to go over that I normally do. Go into all securities. Let's just take a look at sprinters. Your HGSI strategies, Woodward Brown, archives, reference lab, miscellaneous, sprinter one step. So typically these are great stocks, both technically and fundamental. And you know, if you don't believe me about oil and gas, look at how many of these stocks are oil and gas. And so many of those we've already looked at. Here's your Motor Car Parts of America. A couple of things to throw in here. Gas log, I know a lot of you out there own it. I own it as well. The oil shippers have been in a nice move. GLOG here, as you can see, a great EPS growth. You can see that above. Really took off back here when it had a PSR reversal and a big move to the north side, still going up. Pays a 1.7% dividend, like them a lot. But this is a way to find good stocks. AXAS is another inexpensive oil stock that I think a lot of people have as well. Based, multiple kahunas and volume came in, Momo breakout from the squeeze and off to the races. Still a relatively cheap stock that makes money, probably has a long ways to go. Wow. All right. Name from the past. This is an aluminum company, a reseller. And something's going on with aluminum. Pull back, perhaps a nice double bottom in here running, multiple pocket pivots. This is DXPE. It makes money. Very expensive stock. God, I remember in 2006, 2007, that this was just a crazy company. And it had a big run up. Here it is. And then a big drop in 2008. And this was 2008, and this was 2007. The reason why I was sort of aha is because you'll see on my buy list, all right, what did I do here? Take off the filter, Jeffrey. You'll see a thing called Century Aluminum. Let's put on a daily chart. Here's a chart, stock that's been beaten up for a long time. Look at this move Century Aluminum's having. Look at its earnings per share growth. Turnaround stock, so a box 7 stock, turnaround. Probably doesn't have the earnings per share growth to be a box yet, but it's starting to have earnings coming in. And even look at Alcoa. Same chart. Aluminum is starting to work. Let's very quickly do a group inclusion filter, and then I'm going to say goodbye. Designer. So remember, the hypothesis here is that these smart groups contain the best of the best. And if you're in a lot of smart groups as an individual stock, then you must be a really good stock. So I look at all the strong stock smart groups. I want to see which stocks made it to the highest number of lists. And I want to look at the top 10. So I'm picking my favorites. And before I go, I'm also going to show you the volume thing that I built with George yesterday, which I think it's really powerful. AAA, we'll call this Web Gems 4.20.2014. I only want to look at the top 10, and I'm going to hit OK. So here's the stocks that made it to the majority of the list. Let's see how many of them we've looked at already. Micron, well, you can pick which energy your stocks you looked at. I would say we've hit every one of these except for Vips, which is an internet retailer. We've either hit them or we've hit their brothers. So here's a very quick tool, and let's very quickly just flip through these. In no order in particular. Athlon, we talked about this as a junior oil big move. Diamondback, big move. EOG, not so junior, but breaking out an expensive stock, but a leader. Gas Log, the shipper. Matador, same pattern. Lower left, upper right. Didn't love the earnings per growth going forward, but you can't ignore where it's come from. Micron, we talked about the chips. Plug Power, the volatility squeeze. Sanchez, another oil stock. Triangle, we looked at. And here's VIPS, the internet retailer, lower left, upper right, setting up at a perfect buy point. Mobile break up from the squeeze on Friday. I set my buy step on this one. Be right above that PSAR dot. If I get taken out, I'll ride it up for a few points, but with tight stops. And there you go. So let's do some summaries. I don't want to come off more bullish than I am. I think that we're getting finished off with a great week. Growth appears to be back. Volatility has dropped, which is good for the market. Interest rates seem to be stabilizing. There still are risks. I showed you how the small stocks, indicative of the NASDAQ and the Russell, are laggards, and I'd like to see them turn around as well. We might be seeing a move into old stodgy industrials and transports, trucking, shipping, and railroads seem to be leading. As I look forward this week, I'm going to let the market tell me what it's going to do. I'm going to be monitoring futures, internals, and contras to find early signs of rally failure. I think I've proven to you that the leaders are going to come out of energy, transports, semis. I think pharma and biotech, the industrials as well, pharma and biotech are at an interesting position. We'll see if they break up or break down. Don't forget the seasonality. Market peaks usually occur in the next couple of weeks, which means put a tight leash on your stocks and stops. Lastly, this meeting occurs even if nobody else signs up, so you have no risk of me canceling if you book your flights. But I may cap it at 15. Right now we've got 5 in the first week. It's going to be a great meeting regardless of your HGSI background. Is it an HGSI meeting? Well, I'm presenting. I always use HGSI. It's an investing meeting. It's a strategy of how to trade growth stocks. It's using HGSI, TradeStation, Thinkorswim, and my other favorite tools, Magenta Trader. There will be other speakers, including John Person. And I think at $850, it's a bargain, especially since I'm going to feed you. Contact me, Jeffrey at highgrowthstockdoc.com for more questions. Trade safe. Have a great Easter, what's left of it, and we'll talk to you all next week live. Thanks, everybody, and goodbye.